Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Friday, February 5th, 2010. Another down day on Wall Street across the board as we see the markets coming down sharply on the day. The Dow is down 150 points, Nasdaq is down 21, and the S&P 500 down 17 on the day. That's 1.5% on the S&P and the Dow, and 1% drop on the Nasdaq. Now, you are getting a little bit of a bounce. We just came down to this 104.50 level and tagged it here. That is key support on the SPY. You are getting a small bounce up. Again, until you get a bounce all the way back up to this 20 moving average in this blue line, there's not a lot of resistance on the upside. So this market could bounce back later today. We'll have to see again how it goes. But right now, continuing to see the selling. Basically, in the last 2 days, you have dropped now 400 points. Over 250 yesterday and 150 today, equaling 400 to the downside. This market has been in a sharp sell decline ever since we got really Obama out on the warpath against the banks. And then you add into that the economic picture globally, sovereign debt issues, you name it, it's causing a major pullback in this market. Now, again, things are bouncing here. In fact, oil is getting a sharp bounce. The dollar is probably coming in just a little bit. Let's take a look at the USO. And the USO is getting a little bit of a pop here. That's pushing up the UCO. UCO is getting a nice pop, which is 2 times long the USO or oil trade. And again, what a pop here actually on the UCO as it jumps all the way back up to 980 here from a low just made earlier, a little while ago at that 958 level. Now, looking across the board, folks, stocks like Goldman Sachs are on the downside. You are seeing Goldman sell off, but overall not a major sell-off on Goldman. You're seeing more of a move here on some of the commodity stocks. ExxonMobil is getting hammered, although even that is starting to get a bounce. I like this Exxon trade here on the long side because it is at a double bottom. Nice little pierce here of a double bottom from the other day. You pierce the low, look for a little bit of a bounce. It's retraced all the way back down. It does look somewhat attractive, so we'll keep watching on that and see how it goes from here. Looking at the spiders, let's focus on the spiders overall today to see exactly what's going on. That's the daily chart. I will not go into that because you can see, again, key levels that I can't really discuss. Right here at the 104.50 to 104.60, that's where you're getting your bounce on the 60-minute chart. There's the trend line in my chart. And again, if you get a move all the way back, you're going to go back to about 105 or so before you see, back to about 105.25, 105.30 before you see any little bit of resistance on this chart pattern. All right, now, a couple things to go over. First of all, you can see the down move we had in spirit of bear flag pattern. For those of you that recognize patterns like we teach, you can see very, very clearly down move, up move. That's an in spirit of bear flag. What does that tell you? You're going to go lower on this move. Target on this move has not quite been achieved, but in the short term, I think it has. All right, I do not expect much more downside today, if any. In fact, I would not be surprised if you see a bounce in this market. Keep an eye on that into the close as this market could retrace back up. Looks like a decent buying opportunity on a few different plays. I have posted plays today again on the swing trade side of the market in the hot charts and alerts, which is part of the research center. You want to get in that right away because these plays should play out in the next 3 trading days or so into next week. Be ready for that, folks, again. In addition, of all my shorts that I've held since I called the top on January 11th and made tons and tons of money on the way down, the only thing I was left holding was QID. I did sell half that position today at $22.10. Again, that's on QID, which is 2 times short the technology sector there, or the NASDAQ, or the Qs, in fact. And if you go to your chart on your 60-minute, you can see how long of a move this has had. I mean, look at this move on QID off these lows back into the $18 range. Now, again, as I said, I sold at $22.10 on the QID. What a move here today on that QID, continuing to inch up, and over the last few days, really a $4 move from 18 to 22. Going back to the SPY, folks, just to touch base again, you're getting a sizable bounce right now, a big bounce back above 105. Again, look for a move all the way back up on the 10-minute chart. There'll be a lot of resistance back at 105.70 on the 60-minute, 105.50 or so, 105.45. There 45. There will be a little bit of resistance, but I think the big level here is actually the 60-minute chart. The 10-minute chart right here. If you move all the way back up, because you also have the 20 moving average up here and this blue line, you can see the pivot low bounce, and then it rolled over. That's telling you there's a lot of support there, or there was. Once it broke, now it's a lot of resistance. Keep an eye on that, folks. We'll continue to update you, but look at some of these commodity plays. I've talked a lot about them to my premium members. I've given them the plays that I like. I've given them the plays that I've entered today in the chat room and in the research center. And again, we've been cleaning up. Every member in the research center, every member in the chat room should have been cleaning up over the last really month in this market as we've made unbelievable calls on the short side, on the long side. We're neither bulls nor bears. We just get on the right side of the market. Bottom line, avoiding the hype, enjoying the profits. All right, folks, enjoy the rest of the day. Again, be careful in this market. You have to know what you're doing. You want to be involved here in the research center. Talk to you soon. Take